Isaiah. Sub G1. I'm gonna just post everything on socials and we'll get it going. All right, how's everyone doing? Let me see. I can turn this down a little bit. All right. Just posted everything. We should be good. All right. I need to get the weekly. I need to get the calendar real quick. Give me 2 seconds. Forgot to grab that. Dun-na-na-na-na-na. Okay, wait, this is first Friday of June, so it's gonna be an NFP week. First Friday every month means we're looking at NFP week, which is usually wonky delivery. Dun-na-na-na. All right. Banana, banana. Visual, bring the front. All right. So, starting with the economic calendar, we have 4th of July this week. I didn't even realize that was Friday. So we have 4th of July on Friday. It's a bank holiday. We have a NFP week because it's the first Friday of the month, right? The first Friday of every single month is going to be your NFP week. So let's start on Monday, right? Monday we have no news. Nothing on Monday. You guys know what I say every time about Mondays with no news, right? We are more likely to have a lack of volatility. We're more likely to consolidate and just be lethargic price action on days like that. Let me go ahead and put this so I can get my... I'll put this guy at the front. Okay, I can get back rid of that. So if Monday has no news, we're going to be anticipating that as low volatility, consolidation, just accumulation for that weekly range, that weekly profile. And so we're really not going to expect a lot of movement on Monday. However, going into the day, I'm always just skeptical and I'm letting price prove otherwise. If we come into the Monday in the session and we're creating fair value gaps and we're expanding and we have a clear draw, I will trade. So I will say, like in the past, we have said, Monday no news, likely not going to trade. But the reality is that's just a lazy way to look at it. If there is fair value gaps being created in price action, that's the signature of expansion. That's the signature of volatility, right? And we want to position ourselves in volatility. So it doesn't matter if it's a Monday with no news. If price is moving, it's moving. So, that's something that you learn through experience. And you show up to the Monday, you're skeptical, you expect consolidation. But if it proves otherwise and we actually expand on that Monday, we'll take a trade on Monday. Tuesday, we have Canadian dollar, bank holiday, pound, yen, US dollar, JPOW speaks. So we have a good amount of red folder on Tuesday. Wednesday, we have ADP, non-farm employment change for US dollar. Thursday, we have Swiss franc, US dollar. And then Friday, we have July 4th. So that's a bank holiday. So really, these middle days throughout the week are where the volatility injection should be. Monday and Friday. Well, Friday altogether, I won't be trading. It's 4th of July. It's a bank holiday. So I won't be touching anything on Friday. I won't even look at the charts because that's a day for me to decompress. And there's no volatility because bank holiday. So Monday, we'll go in skeptical. We'll see if we want to expand and create fair value gaps. And if we do, we'll likely take a trade Monday. That being said, we will start with the bonds. Let me move this. There you go. Bonds swept out these lows. We have this liquidity up here. We have this liquidity right here. We have previous month highs. So I'm just kind of marking out the premium and discount arrays that are close by. Well, we hunted the sell side low and then we got a clear respect of it. And now we're pulling back with a bullish monthly candle. This monthly candle closes in 1 day and 4 hours. But the way this candle respected the sell side and pushed higher, right? We had a open, low, high, close. I'd be really looking at this potentially as a draw on the monthly. So I'm looking for another bullish candle next month on bonds. At least that's how it's looking to me, just based off the monthly. Drop into the weekly. You can pull. I'm not sure. Isn't there, are you saying isn't there no NFP on Friday? Or is there? I'm not sure. Because 4th of July is a bank holiday. I actually don't know. So this buy side is my draw. We're sweeping these highs. Pulling back in the range, likely to just trade into a discount array to go higher. Is it Thursday? Yeah. So I'm looking at this buy side on the monthly. Now we want to see, all right, now we want to frame our narrative. What discount arrays are we going to trade higher from towards that buy side, right? So if we have a bullish draw on the monthly, okay, how on the daily, the 4 hour, the weekly, are we going to deliver towards that draw? Right, so draw and bias gives you where price is drawing to. But narrative is how price is going to get towards that draw. No gaps. Not a lot of expansion here on the daily on bonds. So not much to pull from here in terms of the daily and weekly. There's a lot of low resistance liquidity being built up here too. It's just a pretty choppy bonds here. Based on the monthly, I would be expecting the buy side as a draw, but we may want to pull back a little bit first, run out these lows because this is a good low resistance liquidity signature. So we'll see. That's not very clear. I don't find bonds very clear right now. Yeah, there's a lot of sell side being built up right here. But then on the monthly, we still have previous month high and the respect of that low. So the monthly looks bullish, but then the weekly, the daily signatures look like a lot of sell side being built up for a retracement. So this is very 50-50 to me, and it's something I'll just stay away from right now. And the reality is not everything is going to be clear as day. I would just be waiting for more information here. Usually I like to see this low resistance liquidity run on the buy side of the curve for my shorts. So when I'm selling, I want to see this signature over here to get that nice expansion through, which kind of conflicts with that monthly bias where I'm looking for the previous month high. So I'd be waiting for more information here and kind of just waiting to see how price plays. We may want to retrace here, but I don't really see anything inefficiency wise to go ahead and reach for. So pretty unclear on bonds. I'll just leave that alone. Obviously I don't trade bonds, but run the liquidity though would be right. Yeah, we could retrace for sure. So I was going to potentially see if we wanted to sweep this external on the monthly and then retrace back for the imbalances up here. But as we can see, based on this monthly candle close, we're just expanding right through. So dollar is very bearish. Even on the monthly, we're just closing well below that external, right? We didn't sweep and respect it. We just ran right through it. We disrespected it. So reading the candlestick behavior is very important. And it's going to validate or invalidate your draws, right? So for me to have a bullish draw there, I would have needed to see the respect candle, the wick, validate the respect of the external. And then we target the internal right here. But obviously that is not being validated by price action. This is what I talked about on Twitter about creating theses, having no ego, having no attachment to the theses, and then just letting price validate or invalidate them. So we're looking for lower dollar now because we're clearly expanding through the external. Now, do we have any imbalances or anything in here? This looks like a pretty efficient leg here. No imbalances in here. We've already traded into this internal and expanded lower. So likely on the daily and 4 hour, we have some imbalances in here. Right. So this leg is really all I'm worried about at the moment. And I'm looking for lower dollar. Is this overlapping? Kinda. Not really. I take the bodies here as my overlapping area. I'd be looking for something like this to go lower. Potential retracement on dollar up into this area here, area for value, then we can deliver lower because I'm still bearish, very bearish dollar. We'll throw that red. Looking quite bearish on dollar, which means euro, pound, we're going to be bullish. Let's go ahead and remove these. It looks like we had contract rollover. That's why the drawings are all messed up. Security info. We have ESU. Remember when we had this pullback not long ago and we talked about how this can just be a sweep to continue higher, right? Because we have bullish order flow and we always want to submit to that order flow. I specifically remember saying in one of our forecasts here that we can just sweep these lows and that can just be a stop hunt to continue higher. And the reason is because we want to submit to the higher time frame. And when the institutional order flow is bullish and we're looking at something like the S&P or the NASDAQ that's just made to go up, we're viewing these pullbacks as just that, a pullback or a retracement to continue higher. I specifically remember saying that this is likely going to be a stop hunt to continue higher, and we're viewing it as such because of that monthly bullish order flow. So because we're in a bullish trend, because the S&P and NASDAQ is made to go up, and now what are we seeing? We're running towards all-time highs. So we hunt these lows, right? That's our monthly discount array. Now we're looking for buy side and all-time high draw. We didn't get a retracement into this gap down here. We just actually breakaway gapped higher. Now we're likely going to have some daily gaps up here that we can look to frame trades off of if we want to have some form of retracement. There is also a scenario where we just straight up breakaway gap towards all-time highs because now we're getting close to that liquidity. So we'll see if we want to retest these gaps here or if we want to just reach right for this buy side. How are we going to determine which is occurring? Simply by reading that 1 hour, the 15-minute, and the 4-hour order flow, right? Framing the narrative. If the 1 hour flips bearish, 15-minute flips bearish, and we're creating gaps lower, we're going to look for a bearish retracement here into the daily gap. However, conversely, if we just expand and continue and sustain bullish order flow on the 1 hour, we're just going to look for this buy side draw. Right? So every time frame acts as a compass for the ones above it. And so in this specific scenario, we're just going to be reading that 1 hour and 4-hour order flow. We can see here how the 4-hour traded right into that imbalance. If we look at NAS, we had SMT at those lows. I believe there was SMT. I'm not seeing it now on ES and Q. Was it on the micros? Let me go look. Actually, it might have been this 4-hour gap. Let me see here. Where was the SMT on the 4-hour we were looking at? There's an SMT on this retracement. Yeah, I'm not seeing it here. I saw it earlier. I'd be on the 1 hour. There was, I think it was this long that I was looking at. I didn't trade on Friday because I was busy. I think this is what I was thinking of right here. It was the 1 hour long for my model. Right here, this bullish SMT. I just mistaked it for the 4-hour. So on NAS, we swept these lows. Had that hunt into the 1 hour. Right? That was a really nice model. That's the setup I was thinking of, not the 4-hour. There is an SMT on the 4-hour. But you can see how we've retraced and offered fair value on the 4-hour now. So we may just want to continue higher here. What's up, by the way, Vistum? Got that. Nice. Yeah, I wasn't trading Friday. Otherwise, I would have been looking for that. It's a nice harmony model. We have the 1 hour bearish gap here, but I'm not too worried about that. Holding my bullish bias. This will be interesting. And this is what I mean about using the 1 hour as a compass. Because like we talked about, going into this week on indices, to really break this down for you guys, I'm going to be gauging whether or not we want to reach for this imbalance, right? On the daily, do we want to offer fair value on the daily? Because we do have some inefficiencies here to reach for. Or do we want to just seek liquidity, right? Do we want to just go run to this buy side? So how will I determine that is by reading the 1 hour. So this bearish gap is actually going to be very telling. If we just invalidate this gap going into tomorrow and we're expanding through it, 15 minutes closing above, you know, we're just not respecting this internal here on the 1 hour, I'm going to look to target this buy side on the daily, and I'm going to assume that we're just going to reach for the liquidity higher. Conversely, if we just respect this and expand lower on the 1 hour, then I'm going to be looking for that retracement towards the daily gap to offer fair value. So that's how we're using the 1 hour as a compass. And so with indices right now, long-term macro perspective, I'm bullish, but I need to gauge whether or not this 1 hour respects or disrespects to see if we want to retrace first to ultimately head higher. So I'd have them on the wait list, and I'd just really be gauging that 1 hour order flow. The 1 hour order flow is going to give me my bias, right? You guys, I just listed the scenarios there. So whichever occurs is going to validate the bias. Let's look at the Dow and Russell now. Closing above the imbalance. Looking at buy side draw as well. Weekly, do we have a gap? We do not. Quite bullish. Daily gaps to the upside. This looks very bullish, like it wants to just keep expanding here. Not much to say about Dow here. Just quite bullish. 4-hour retraced beautifully into that 4-hour gap. Nice expanding markets here. These are the nice trending markets where Harmony model plays well. So my model, Harmony, is built off expanding markets, right? I want to position myself in markets that are willing to move. You need to have the data, you need to have the understanding of your model, the relationship built with your model to know when it lacks edge, when it's more dull, and when it has extremely sharp edge. And knowing when to let off the gas and press the gas, or, you know, just being able to position yourself at the right times is extremely, extremely important to having edge in the market, because your model isn't going to just perform the same way year round. You know, that's a fallacy. Anyone who's selling you that dream, I would run, because it's unrealistic. The markets are constantly changing. The market conditions are going to be more volatile. They're going to be less volatile. We're going to have different things impacting these markets. The money is flowing to different asset classes in different places all times throughout the year, right? So your edge doesn't just remain sharp year round. And so being able to identify that and identify these market conditions where you might lack edge or have a lot of edge is very key to know when to let off and push the gas. So again, monthly, failing to offer fair value, right? Inversion, whatever you guys want to subscribe to. We're failing to respect this gap and move lower. Some low resistance liquidity here, but we are just continuing with bullish order flow here. No daily gaps to the upside. Russell looks a bit less bullish than Dow. However, we have that retracement into the area of fair value in a nice respect. I'd be looking for price to just continue higher here. And I honestly, gun to my head, favor just indices reaching for the buy side based on how Russell and Dow look. I would favor just seeing ES and NAS continue higher here. And not even, this may just bag based on that daily close, right? The daily close above the second candle. And the way that Russell and Dow look, this looks quite bullish, like it wants to just bag again on the daily. That's really just gun to my head what I'm seeing. But the reality is throughout the week we're going to react based on that 1 hour and 4 hour order flow. We're bearish dollar, so we're bullish euro and pound, which checks out because they look very, very bullish here. Starting to get some really nice expansion in the markets after quite a long period of consolidation there. Just slower markets. Looks like this is going to just... We'll see how dollar trades here, because we are sweeping that previous candle high, right? This is PDH. We're sweeping that previous candle high. We may want to work back. This is a decent signature for lower if the 1 hour flipped. So we may want to see a retracement to the internal, but it really depends on the direction of dollar. If dollar is going to continue extremely bearish and not want to retrace, then we're not going to get this retracement to the daily gap. So again, I'm going to be waiting, but your highest probability trade idea is going to be once we tag these internals, just framing longs towards the external. I would be open to shorting towards the internal as well. I trade both ways with my model. So very contingent on what dollar wants to do. Does it want to retrace before heading lower, or does it want to just continue lower here? Because this looks like it may want to retrace first, like we talked about. So you could play this both ways, but the highest probability is going to be longs after dollar retraces. Weekly internal tagged, we're expanding. Better risk reward on DIA and IWM over SPY and NASDAQ. We have this bullish imbalance. Marking out the gaps. Really just asking myself from the top down, are we seeking liquidity or are we offering fair value? That's how you're framing your narrative. You're building a draw and a bias, and that truly is the edge. Exact same logic here on pound. Looks more bullish than euro actually based on that push higher. We could look at euro pound as well. Let's see. Does euro or pound look more bullish? Euro actually looks more bullish based on euro pound. The bullish 4-hour gap. Interesting. We'll see what dollar wants to do, and we will apply that to euro and pound. I will be looking to potentially trade euro and pound this week. It looks pretty good. Like it'll have a clear draw with dollar. I need clarity on dollar before I even look to trade euro and pound because it just impacts them way too much. Australian dollar. Realized even though we don't go too far back. Dry? Spy? Did you mean spy? Dixie. Okay, dollar. Yeah. Let me see. Interesting. Yeah, I don't use the yearly, but we are in a daily or a yearly gap. We're still quite bearish on dollar though, personally. Internal tag here, weekly. Not much to pull from that. Daily internals down here. Buy side resting above. Do we want to just continue to reach for that at the 4-hour? We'll be gauging that 1 hour. If we flip on the 1 hour here, we might just want to go reach for these highs now because we have a lot of buy side engineered right here, which is, like I said, what we want to see on the opposing side of the curve. So for longs, this is the type of signature you want to see. And this looks like the 1 hour is flipping. Again, very contingent on what dollar wants to do though. So I can see dollar retracing up to go lower. USD Canadian dollar. We have the monthly internal up there. Weekly gap. Daily gap being respected here. If we get bullish, dollar can potentially look for that buy side, but this is a huge wick as well. Pretty yucky stuff there. Don't like that wiki price action. USD Swiss franc very bearish. Monthly lows. Closing below. Daily internal right here. Want to see that get tagged to continue lower. Need to see that bullish retracement on dollar, and then once we get that sell off, we can look. This looks pretty good for lower. Oops. Just need to see dollar align with that. Great idea there. Very wiki. Lots of engineered sell side here, which you like to see for a explosive short to the downside. This could have a nice expansion lower, potentially once we get dollar on side with it. I do like the way this is engineering, right? Trend line, liquidity, lower resistance liquidity, whatever you want to call it. Once this breaks, you want to see expansion through that. Monthly sweep, weekly expanding. Let's go ahead and get rid of all of this. We didn't tag this gap. We do have the buy side resting up here. Within the daily internal, respecting it. I would want to see this continue higher from here, personally. Our area for value on the 4 hour. If we're going to go higher, we should do so from here. And then go look for this buy side. AN. Respecting this gap, just really in a extended consolidation here. This looks disgusting. I would not trade this type of cross here. Just use it for correlation. Crude oil. A lot of stuff going on with war. Crude oil has been very, very volatile. We swept that buy side. Right, that is our major liquidity. We always talk about how these areas of liquidity are extremely important to gauge the reactions. I think my thing's lagging. Traded into the weekly internal and closing below. This is a very bearish reaction here. We are in a consolidation, so we may want to just go reach for this sell side down here. If we close below this and can, sustain bearish order flow here, we may just want to go reach for that. That'll be interesting. We have the daily gap right here. Just consolidating at the moment. Looking very bearish after that sell-off though. Gold and silver. We trade gold by itself, meaning just price action since it doesn't correlate with dollar. Also, do we trade within kill zones, or is it building vol? I only trade gold from 8 to 12 because after 8 to 12 it dries out. You want to be positioning yourself to trade gold within a window of volatility. So for me, that's ideally just New York AM. I don't trade at PM. I mean, gold looks pretty bearish on the daily. When we look at silver though, I believe we're still respecting a weekly gap. Gold sweeping these daily lows. Should see some retracement here. Potentially to that overlapping area here. Because there's no gap down lower. US dollar. And yeah, I'm looking at silver as well alongside gold. So I'm pairing them together with my Harmony model. I'm always looking at two correlated assets. So with gold, I'm always looking at silver. I'll take these bodies. This looks quite bullish for a retracement at least. And from there, we want to gauge the reaction. From the sweep of these lows, I would expect this to potentially want to reach for these highs. Silver, I believe silver looks bullish as well. We are sweeping major liquidity here, and so trading the next fair value gap after a major liquidity sweep is something I found through data is very low probability. It's something that I tend to avoid. That is a nuance. Like, I like to talk about nuances a lot. I never had a great word, a great way of articulating that intuition, that the nuances, those little things, red flags, confluences. But nuance is just a great way of putting it. So shout out to Lance Brystein. He's someone that definitely put me on to, I don't know, just the word of nuance. Nuance is the best way to put it. The nuances matter. Intuition is a real thing in trading. That's something I tweeted about today. Right? So a nuance that I've learned through data that just makes my trade setups lower probability is trading that first for value gap after a major liquidity sweep. We are currently sweeping major monthly buy side, and then we have this weekly gap. So that's not a great signature that I like to see for longs. However, if we respect this and order flow continues bullish off the gap, we could still play after the previous week low sweep. So I'll be gauging the order flow here. Gold doesn't look extremely bullish. Don't think silver looks that bullish other than that weekly gap being respected. So we do have the weekly internal to external, but the fact that we just swept that monthly buy side, that's a premium array. Now we may want to continue lower on the monthly, which makes this lower probability, and we'll see how that plays. But that's my thought process, and I believe if we were going to go higher, we should have already done so. I really do not like this retracement, and I'm actually leaning bearish gold and silver. Probably, what's the word I'm looking for? Probably opposite of some others. I don't know. I haven't looked at what anyone else is saying, what their biases are, but I bet a lot of people are bullish right here. But when you really put it all together and frame that narrative, this actually looks quite bearish. If we were going to go higher, we should have already done so. In my opinion, we should have expanded off this. I would have wanted to see this push us higher on silver. Off this previous week low sweep inside the weekly internal, I would have wanted to see this expand. This is looking quite bearish to me on the 4-hour. Gold as well doesn't look too bullish, but we'll have to see. Again, we're always just reacting to price action, and we're not marrying a bias or an idea. We're letting price validate or invalidate it. I'm creating theses, I believe is the plural, the correct plural term, theses around price action, and then price validates or invalidates them. Really would have wanted to see that expand earlier, and so I'm not too worried about the weekly. We also swept that major monthly buy side, so put it on the wait list, but those look pretty bearish to me. I mean, we'll have to see. Again, I'm always reacting, but I'm seeing lower. Potentially a retracement to here to go lower on gold. That's what I'm seeing personally. Those things can always change as the week unfolds and as new information comes from price, but that is what I'm currently seeing. Obviously, we have 1 day left until all these monthly candles close, so that'll be something important to note going into the next month. I'll be checking, the monthly and making sure I have everything marked out and information based on those monthly closes. Bitcoin swept the weekly lows, the weekly internal. Now we're expanding. We should have a daily gap in here. Do we? We have this daily internal. We have that internal we already traded higher off of right here. You'd want to see some form of expansion if we're going to go higher now. Not loving this close below the 4-hour gap. Doesn't look very bullish. Should have expanded higher off this. We'll have to see how that plays. Really just looks like some consolidation here. Ethereum. Monthly internal being respected. That is very bearish. Look at this monthly close. That's a nice bearish reaction there. And then we have the new monthly gap forming in a day. Go ahead and just mark it out now. Consolidation as well. Respecting the daily internal. Sorry, that's weekly. Expecting the weekly internal. Daily gap tag right here, but we didn't expand. We didn't tag this gap. We tagged it on Bitcoin. Just consolidation as well. We may want to retrace back lower. For the daily internal, we'll have to see here. I personally don't trade crypto or anything like that, but look at ESNQ again. It's where I've been putting a lot of my focus. All-time high draw. Monthly flip. Dun, dun, dun. Weekly. Yeah, we might just want to reach for the buy side for real. Looks quite bullish, especially when factoring in Russell and Dow. We might just bag these daily gaps and go reach for the buy side. Would not surprise me at all. With the way we've already retraced on the 4 hour and how we're respecting it, I would want to see just expansion here, but we'll see. Obviously need to react to whatever unfolds throughout the week. Daily. New daily gap right here. But yeah, we'll have to see how indices want to play. Bullish macro, but yeah, this retracement on the 4 hour being respected too. Strong wick. Really be looking at this buy side next. I think we likely invalidate this 1 hour internal. But that 1 hour compass is going to be very important throughout the week for me. I'm using the 1 hour to kind of guide me to that daily draw. I'm favoring buy side. We just look very bullish on indices, especially on Russell and Dow. And then with that 4 hour internal retracement, this looks quite bullish. But obviously things can change if we respect that 1 hour and we start reaching lower. We'll target the daily gaps. So that's how game planning going into the week. All I do is react, create a thesis, validate or invalidate. Do not care about being right or wrong. I don't attach my self-worth to these charts. I don't attach my ego to all the pride and let price action validate or invalidate. That's what it comes down to, and that's how you're going to find consistency. But that's pretty much it. That's what I'm seeing. If you guys want analysis throughout the week, hop in the free Discord. I'm updating it daily, literally telling you where your eyes should be, giving you basically free money if you know how to execute, telling you exactly where your eyes should be and what's going to make you money. So I don't know why you wouldn't be in there for free. And then if you want direct mentorship, if you want direct access to me, live trading, etc., check out the academy. The link is in the top left. You can also just do a 7-day free trial, and if you don't like it, just cancel. So literally no brainers and free value in the Discord. So hope to see you guys in there. I hope that the forecast was insightful, and I hope you have a good rest of your days.